Hi, Sherwood. Welcome. Thank you so much for joining us today.
Hi, Alexa. Hi, everyone. It is great to be here on what seems to be a very hot day across the United States, but I'm sure we can all deal with that to learn a little bit about crowdfunding. So let me jump right in and tell you about this relatively new phenomenon called regulation crowdfunding and how you can utilize this for your startup or small business to raise capital. First, I'm going to tell you a little bit about who I am so you know that I'm not just some random guy talking about some new concept, but actually am an entrepreneur like many of you that has the same experience of trying to raise money for the business. If you go to this next slide here, like it is, hold on. Oh, sorry, okay. Technical things. All right, so I'm that short guy on the left right there. That's me, Sherwood Neiss. I'm one of 3 guys that went to Washington, D.C. with this idea to utilize the internet to raise capital for startups and small businesses. Prior to doing this, I was the CFO of a startup by the name of Flavor RX. We flavored medicines for children so they're more compliant. We grew this idea from 1 pharmacy in Washington, D.C. to 40,000 across the country. So I know what it is to take an idea and turn it into a business. I know how critically important it is to have capital to help scale that business. And I know what it is to exit a business because we sold that business to a private equity firm in 2007. Under the old school method, I raised millions of dollars for this company by going to accredited investors, venture capitalists, and raising money from them. But I always wondered, why can't we go to the crowd? Why can't I go to customers that call me when they get their kids to take their medicine and say, how can I become an investor in your business and actually take money from them to be a shareholder in the company rather than go to a venture capitalist? And I asked lawyers about this, and they said, well, Sherwood, back in 1933, laws were written to help prevent people from being scammed, and these laws prohibited people like you from soliciting people that were not rich from investing in their businesses, and they prohibited you from actually using any form of communication like the internet, even though it didn't exist in 1933, from communicating with people about these investment opportunities. And I said, well, that was great back in 1933 when we didn't have any transparency that the internet has brought, but why can't we do it today? And their simple answer is because the law hasn't changed. So rather than complain about the law as it was, my peers, Jason Best in that picture, Zach Cassidy-Dorian in the middle, and I crafted a framework to update the security laws to the internet age. We walked the halls of Congress. We built bipartisan support. We had our bill introduced in a committee, in the House Financial Services Committee. It passed the House 207-17. The White House came out with a statement of administrative support directly from Obama, saying this is something that Congress should get behind. It passed the House, as I said, 207-17, and then it went over to the Senate where it became part of the Jobs Act and passed 73-26. One of the highlights of my life was sitting in the Rose Garden of the White House where President Obama signed this bill into law and took this idea that we had to allow people like you and me to go online and raise money from people that we know. So after this, we wrote a book called Crowdfund Investing for Dummies. You've probably seen it in the Dummies series. We've worked with the World Bank. We've worked with the Inter-American Development Bank. As a matter of fact, we've worked in 42 countries around the world with people that are trying to figure out how to leverage this new form of access to capital via the internet. So today, I'm not going to dig into much more of that other than to tell you that we come with a lot of experience, not only as people that wrote the law, wrote the book, but we're all entrepreneurs that have raised money both via crowdfunding and the old school methodology. So the topics of discussion today, which you all saw, are what is crowdfunding, which crowdfunding is the best for your business, how to evaluate an equity crowdfunding platform, keys to a successful crowdfunding campaign and how to attract investors, and the impact of raising money via equity crowdfunding for your business. I think it's important for us to really step back and understand what is crowdfunding and the different types of crowdfunding to clear up any confusion that you might have when people say, well, why don't you crowdfund your business? You understand the different options and avenues before we directly get into that one specific type of crowdfunding known as equity crowdfunding. So crowdfunding is really just a form of raising capital. The traditional way that people would go around about raising money that everyone's familiar with here is you use your own personal money, you use a credit card to finance your business. If you're lucky, go to a bank and you get a loan and you repay interest and principal on that loan. Or you go to investors. If you've got an idea that's worthy of getting investment from angels or VCs, you would pitch your idea to them and hopefully get them to invest in your business, and in turn they would own a piece of equity in your company. So that is the old school traditional way, and it still exists. Nothing has changed with this new form of crowdfunding that has come into place. It just sort of fills a funding void that exists in the market before this. This new form of crowdfunding has 5 different flavors. You've got equity lending, this thing called ICO, which many of you might be hearing about, which is this initial coin offering, rewards, and donation. Now, the donation and rewards were the first 2 to come in to play. Then with the signing of the Jobs Act, we've had equity and lending come into really prominence now. It's been around for a few years. And this ICO is just starting to take off as an avenue for opportunity. So what are these different types of crowdfunding? Well, let's break it down for you. The crowdfunding platforms themselves, where you go to raise money online, can be structured into 5 types. Like I said, equity, lending, ICO, rewards, and donation. An equity crowdfunding platform allows individuals to invest in a company, and therefore they own a stake in that business. They have shares in that business. And as an equity owner, they have rights and can vote, and whatever those shares entitle them, and even future profits if the company were to exit. So a crowdfunding platform that deals in equity gives financial return to investors, and you can see equity, lending, ICO all offer that. And Seed Invest is a great example of a type of equity crowdfunding platform that raises money for companies online. Lending platforms are, instead of going to a bank and borrowing money from the bank, you go to one of these crowdfunding platforms, you put up your idea, and the crowd loans you money. And then you repay principal and interest to the crowd via that platform. So you're not writing individual checks, hundreds of checks every month to investors. You send one lump sum payment to the platform distributes that to investors, and they distribute the principal and interest. Funding Circle is another famous example of a platform that has really been scaled dramatically. Billions of dollars have been loaned to businesses via lending on Funding Circle. ICO is this new world that we're in where investors invest into a specific project, a startup or a company, and they receive a digital token in return. That token could represent utility or equity in the company. So utility tokens provide you with services in a business, and these tokens can be traded on exchanges. Now, there's a lot to this. I can't even go into it because it's an entire course that probably takes 3 months to go through. But it is an avenue that companies that are very sophisticated, that have teams that understand and have done this before, have been very successful at raising millions of dollars. And billions of dollars are flowing into ICOs right now. Ethereum is a great example of a ICO-related platform on a blockchain network that allows people to invest in other companies via what's known as smart contracts. The fourth one is a rewards-based crowdfunding. You might be familiar with this because of Kickstarter. Kickstarter really created the rewards-based scene by allowing people to back people that have creative ideas. And so if you're a band or you've got some art-related project that you want to get funding for, you can put your project up there. People will give money. They will donate, in essence, because there's no financial return here, to that campaign. And then if you hit your funding target, that money goes to you. Indiegogo is another rewards-based crowdfunding platform. They do have keep what you get type of crowdfunding, and it does allow you to keep whatever is raised on it. Kickstarter does have the bar that forces you to hit a minimum target in order for you to get any of that money. The last one is your donation type, and this is where individuals are donating to someone else that needs money. And so you see this a lot on the news where someone has an ailment, someone passed away, you need to fund some kid's school trip somewhere. any type of charitable, artistic, religious type of endeavor where there's zero financial return expected. This really takes that bake sale type of endeavor online, and via platforms like GoFundMe allows you to raise money for it. Now, with your donation rewards, you're not going to be raising as much money as you can in your equity and lending or ICO space. So you need to keep in mind, how much money do I need to raise for my business? If it's not that much and people aren't looking for financial return, I'd probably stick with rewards and donation. And by the way, I'm going to go into this much more in a little bit. But if you have something that has an exit potential, if investors might be able to participate in exit, then I'd probably look at equity. If you just need to borrow short-term capital from your friends and the bank's not doing it, lending is a great way for you to go. So what are the pros and cons related to the different types of beneficiaries? Well, let's break it down by the people that are backing the campaigns and the companies or people that are seeking the money from the investors. So for an equity type of crowdfunding, for investors, clearly there's a financial return because there's an incentive for them to own in that business and participate in the exit of it. For the people that are seeking that money, it allows you to fill a funding void. It allows you to get capital where you couldn't get it before and participate in the secondary markets that exist for the equity exchanges. The cons related to equity crowdfunding are it's only limited to companies that can issue equity. It's not suitable for consumer lending. So if you're doing equity, you can't, at the same time do lending. You could do a complete lending crowdfunding campaign separate from an equity campaign, but the equity is just strict equity. If you are a company and you are raising money via equity, you need to keep in mind that you're giving up ownership in your business. So if you don't want to give up ownership, equity crowdfunding is not something you'd want to do. And of course, if you're a philanthropy type of business, equity crowdfunding would work. For lending, again, for investors, there's clearly defined incentives by the financial return in it for them. They get the interest on top of the money that's lent. It's highly suitable for SMEs and consumers. There's options on the secondary exchanges where you can trade these the debt that is owned. So that's something in it for people that have issued debt. For the investors, though, there's limited due diligence carried out. So if you are raising money online and your company raising money online, the due diligence that's usually carried out by a bank or a group of investors is not quite the same. And you need to keep in mind that you are responsible for doing the diligence on the company before you put your money at risk. This also isn't suitable for philanthropy or charitable causes. So keep that in mind. This is only for businesses that are retail, have bricks and mortars, have customers and cash flow. If you are issuing an ICO, this is great because it's for investors. It's the ability to access future products with utility token that is issued by that company. So Kodak is a great example of this, where they issued a Kodak coin and it allows you to pre-purchase the ability to buy pictures online, or if you own a picture and you want to actually license it, this is a way for you to put it up there, have people buy license to it via a token. So the distributed network of it is just phenomenal and allows you to expand the usage of your company or your product. It's suitable to fund equity-like investments with a security token, so you can do the same thing that you're doing in equity in number one, but now you're doing it with a token, and they're really the same thing. They're just called different things. And they are regulated the same way. So that is something to keep in mind. It requires what we call token economics on behalf of the issuing entity. If those aren't there, you're not going to raise any money at all. And there's a lot of volatility with these tokens in the market itself, so it's risky for investors. This is not suitable for lending. The secondary markets for this are still under development. The regulation's not there to protect investors, and the regulators are really coming down on this. So there's a lot of risk for companies that are issuing tokens on these exchanges, and there's a lot of risk for investors that are investing in these tokens. So it's really early stages for the ICO marketplace. Rewards-based crowdfunding gives you the potential future non-financial rewards, such as goods or services like I was telling you about. It's really suitable for B2C entrepreneurs and startups with a physical product. So you've got the product there. You need to test the market with it. This allows you to really go to market and see if there's actually market appetite for your product. I think it really works out great there. There's no exit options for backers that are in here. So you're pre-purchasing a product. If that company were to go on and receive venture capital financing, you wouldn't own any equity or ownership in that business. So as an investor, you're just really buying the product. So for them, they get to experience the joy of helping a company become a business, but they don't get any benefit of the future outcomes for that business itself. There's limited suitability to fund small businesses with this. So it's great to fund the product itself and test the market with it. But if you need to scale a company, you're not going to do it with rewards-based crowdfunding. It's not even an option really for consumer lending or charitable products. The last one is donation-based crowdfunding. It provides a lot of visibility for philanthropy and charitable causes. It's really suitable only for philanthropy or charitable environment projects type of things. There's zero exit opportunities for investors. And if you've got a complex idea or you're trying to raise money for something that's completely hard to understand, you're not going to raise any money via donation-based crowdfunding. I will insert here right now that whenever you're raising money online for any of these scenarios, the less complex that you make it, the more easy it is to understand, the more people will get behind it because they know exactly what the product is, who you are, what you're trying to do with that money, and they're willing to put money behind those ideas. So which type of crowdfunding is right for your business? Well, you have to look at the type of business that you are and what you are providing to investors in that scenario. So let's just look at the first one. For SMEs, if you are a small business and you're really trying to find out which type of crowdfunding can provide funding to SMEs, okay, well, lending is where it is because if you're a small business, you probably have customers and cash flow. So if it's a small business without an exit opportunity, then equity wouldn't work for you, ICO wouldn't work for you because those investors are looking for that exit. Rewards might work for you because you're trying to get people to invest in maybe a product that you have. So it's good, but it might not be perfect, and donations just doesn't even make sense because you're funding a business, and people don't give money to people that are going to profit off of their money. They give it to people that need it for charitable causes. That's why if you look at the SME space, we think lending is the right space for you in the crowdfunding arena. It can help you with job growth and creation, and it will provide increased awareness about a company and its products. Now, if you're a startup and you're just getting going and you're an idea and maybe you've got a good team and you've got that proof of concept out there and you need to scale the business now, and there is someone that could potentially buy that product down the road, well, where do we go for money via crowdfunding? Well, when we look at this itself, we think equity and rewards are the two places that you want to go if you're a startup. If you're a startup with just that proof of concept, rewards is a great way for you to test the product in the marketplace because you want to prove that there's validation behind your startup. And so you could do a rewards campaign and raise money to pre-sell inventory there. If it's a technology-related product, and this is where equity is great with a lot of these companies, equity, let me just say right now, equity is great where you've got an exit potential. It's not going to work for you if the investors don't know that they can get out of your business in 5 years. This is for companies that when you're pitching your idea to them, you can say, listen, we're going to sell this business 5 years down the road and you're going to have an exit. That's where people invest in equity crowdfunding. So if you're a startup in the tech business, this is great for you. It can help you contribute to innovation and job creation, and it's in line with the startup's means and wants. Now, if you're a consumer, meaning just an individual, and you're saying, listen, I need to consolidate some debt, I want to get some money for a small project I want to do on my house, something like that, then lending type of peer-to-peer lending, crowdfunding would be right for you. But we're not going to dig into that because that's really about the consumer type of crowdfunding. If you're a nonprofit here listening right now, I know this is about equity, but again, the donation is where you're going to want to focus because you're just raising money for your nonprofit endeavor. Equity and lending would be out of the question because people are not investing in a nonprofit or loaning money to nonprofits. It doesn't happen online, and that's why it doesn't even fit. Investors, so we've looked at it from the people that are looking for money. Now we need to look at it from the people that are backing these projects. So you've got your investors and your contributors. Investors are investors. They are seeking a return on investment. They want to know what's in it for them. And so when you look at the different types of crowdfunding, equity and lending are where those investors are focused. ICO is where some of them are focused, not all of them right now, partially because the regulation doesn't fully exist in the marketplace. There's a lot of risks because it's still early on. And the regulators are coming down on some of these ICOs. That's why we only give it a quarter of the pie there. And we don't even put it in anywhere in the rewards donation-based. For the contributors, the people that are just giving money without expecting anything in return, your rewards and donation are right where they're putting a lot of money. Now, if you're looking at investors and you're looking at contributors and the average amounts they put in, I'll just tell you right off the bat. For equity crowdfunding, it's about $1,000 per investment. When you're looking at donation rewards, it's about $80 per commitment. So there's a vast difference in the amount of money that people bring to the table when they're looking at giving money to someone with a good idea or investing in a business that they believe in. So that's how you should look at how do I choose what type of crowdfunding is right for your business. But how do you evaluate the different platforms that are out there? So we made this little chart here so you could take a look at it. These are the dimensions under which we evaluate and the criteria for each of them. So we've got 4 different dimensions: the company profile, the platform features, the financial indicators of the platform itself, and any safeguard measures. So with the company profile itself, it's like what kind of track record do they have? What presence do they have in the internet? What financial background have they built for themselves? What kind of honesty, integrity, and reputation exists for that company? And how competent are they and capable at hosting these campaigns and bringing money to the table for the people that are hosting these campaigns? The platform features, you need to look at the maturity of the platform. Is it easy to navigate and get around? What kind of reporting functionalities do they have? Do they provide training and technical support services? How do they communicate not only with you, but what kind of communication features do they have to allow you to communicate with the backers of the campaign? And what kind of channels is it on? Does it only exist on iOS? Does it exist on the web only? You need to understand where the people that are going to back these campaigns can actually come to learn about the campaigns. The financial indicators are really important too, because you want to go to a platform that's been around for a while. You want to know that they're going to be in business going forward, and they're not going to go out of business while they're hosting your campaign. So you need to see the growth potential that they've been through. Where do they fit in the competitive landscape with the other platforms that are out there? Because there's not just 1 or 2 platforms, depending on which tier you're in, which type of crowdfunding you're looking at. There could be 50 or 100 type of platforms. You need to compare the fees and costs. The different platforms have different fees. Those fees come out of the money that you raise. You're going to want to understand what the fees are for running the different types of crowdfunding types and on different types of platforms. You want to check and see the revenue, if you can, about that platform so you know the economic health of that platform itself. And you want to know any social benefits that that platform provides, not only to people that they're supporting on the platform itself, but maybe if they're doing anything for people in the industry or in the companies that they support. And here's the last one a lot of people don't think about, but you just need to think about in terms of the world that we live in today, which is cybersecurity. So what is the platform doing to safeguard not only your information, your data, but people are going to be giving information about themselves, and they're going to be talking about personal, private information and financial information. So what kind of safeguards do they have on that data, the money that is committed to campaigns? What kind of business continuity plans do these platforms have in place in case they go out of business? Think about from the debt side when I was telling you about if you're borrowing money from the crowd and you're repaying it by the platform. If the platform goes out of business, how do you actually keep on getting that money and interest and principal back to the investors? What kind of cybersecurity safeguard measures are in place to prevent hacking of these platforms? And how do they prevent disclosure of information? So we're not going into this in detail with all the platforms, but it's something you need to look at when you're evaluating all the platforms themselves to make sure you're picking the right platform for you. All right, so let's take a moment here to do a quick little poll. I think it would be interesting for us to learn from you, if you're a business looking at crowdfunding to raise money, what type of business is closest to you? So we want to know, are you a retail business that sells directly to customers and want to use crowdfunding to raise money for a retail business? Are you a business consumer service? So you are providing a service to consumers, be it legal, accounting, something like that. Are you a business-to-business service? So you are providing a technology service to other businesses out there, and you want to use crowdfunding that way. Are you a software technology company that's developed some cool little software that could be used for consumers or for businesses, and you want to check that out? I know entertainment's broken out into its own category, but you would be shocked at how many entertainment-related endeavors are out there where people are actually looking at raising money for something entertainment, or you other, maybe something that is in medical or energy related, or is something that doesn't fit this category. So let's just take 30 seconds for you to complete this and see where we're going here. It's interesting. So we've got a lot of retail, a lot of the B2B, so maybe a lot of restaurants out there or food truck type of things, or something that, where we've got customers and cash flows. So you're probably going to be looking at your lending type of crowdfunding. Your business to consumer is your same thing, where you might be a restaurant type of thing. So that's good. Interesting. Okay. By the way, even if you have a restaurant and you can be purchased by another chain, and you've got that exit potential, equity crowdfunding could be completely right for you. So, all right, I think we've got plenty of responses there. Let's just move on now. And let's jump into some of the keys to a successful crowdfunding campaign. So this slide, write everything down here if this is the only thing that you take away from this entire presentation. By the way, putting together a successful crowdfunding campaign is not just listening to one thing like this. This is an intro to the entire thing. You need to really study successful campaigns so you can learn about why did these people raise as much money as they did. And that's how you're going to actually build the best campaign for your company. You really want to find the company that matches what you do, that has raised money prior, and then mimic what they do. But at the end of the day, these are the tips that I'm going to give you right here. You need to have a compelling story in a video. In that video, you're going to have to sell your vision, your ability to execute in a very short to concise manner. The reason that this is number one on this list is when people come to crowdfunding platforms and they go look at your crowdfunding campaign, you're going to have a written section about what you guys do, the problem that you solve, information about your team, but you're going to have a video. And that video is pretty much what everyone or anyone will watch when they want to find out what your campaign is about. And if you can't get across in that video in a short period of time what it is that you do, why you're the right person to do it, how you have the experience to do it, and why you need the money to do what you need to do, no one's going to finish watching that video, and no one's going to put any money for your campaign. So you're going to want to spend a lot of time and money, because it's not going to be cheap to put this together. You don't want to hold up your iPhone and do it, putting together a very compelling video. The timeline, strategy, and team is really critically important. Putting together a successful crowdfunding campaign, and by the way, we built the database, and I'm going to talk about it a little bit, that collects information on every single crowdfunding offering. We've also interviewed a majority of the companies that have been successful with these crowdfunding campaigns to learn from them what are the keys to success. And what we've learned about them is they've spent a ridiculous amount of time putting these campaigns together. It wasn't a 10-day endeavor. It was more like a 6-month endeavor that was broken down into milestones. They had a team, an internal team of people that were focused on putting the campaign together from inside their company, and they had an external team of people. If you're doing equity crowdfunding, you are selling shares in your business. That means that you need to understand the the responsibilities that you have with distributing equity in your company. So you better have a law firm that represents you. You better have an accounting firm that has looked over your books. Like I said, that video is going to be really important. You're going to need a videographer to help you. So you need to have that team put together that helps you achieve the goals that you want to in your campaign without thinking about the timeline that it's going to take, the milestones that you want to hit over the course of putting your campaign together and having the right team together to get it done. You won't hit your target. You need to pick the right type of crowdfunding that matches your investors' needs. So let me just repeat this again. If you are a startup or a tech company or any type of company that can be sold to something else, someone else, VC, another company, you have an exit. Equity is where you want to focus. If there's no exit, if you're just raising money and you need to raise money for your business, but you know that you can't sell your business to anyone else, don't try and pitch equity to investors. They're smart enough to know that there's no exit for them and the money is going to be tied up in your business. You need to look at debt crowdfunding for your business. So really be smart. You don't want to be a fool and say, I want to sell equity in my company when you know there's no exit for those people. And by the way, you don't have to sell equity in your company if you've got a great idea that has an exit. Maybe you don't want to give up ownership in your business. You don't want to share any of the future profits. That's totally fine. Use debt. So you can use debt crowdfunding for a retail business. You can use it for a company that's a tech company. It's got all the different avenues, but make sure that you've got cash flow to be able to repay that debt. And your investors are going to know whether or not you've got the cash to be able to support debt payments. So don't be a fool either and say, I want to borrow money and I'll repay it back over time, if in fact your investors are going to know that you have no ability to repay back that cash over time or the debt over time because you've got no cash flow coming in. Next is a marketing plan and knowing your crowd. So it's not about just putting a campaign together. It's about who do you know that is going to fund your crowdfunding campaign. We've done a lot of research into statistics about what leads to a successful crowdfunding campaign. The reality is if you got your first, your second, your third degree people that are backing these campaigns, the majority of your capital is going to come from people in your first degree connectivity. So it's not that you put these campaigns up there and people that you don't know will come in and fund your idea. We live in an attention deficit disorder society. Nobody's on these platforms looking at campaigns to randomly put money behind. So you better know your crowd. And that means you need to have a social network outreach, a marketing campaign for which when your campaign goes live, you're going to actually reach out to the people in your network and say, hey, we're raising money online. This is where you can find more information about us. This is where you can invest in our campaign. It's really important that you set expectations. And here I've got a link to our regulation crowdfunding data dashboard. If you just type in crowdfund capital advisors and data into a Google web browser, you'll find a dashboard that has a ton of valuable information on all regulation crowdfunding campaigns. You need to understand that you can't raise hundreds of millions of dollars by this. The reason we created this avenue of your ability to raise up to $1 million online is because the funding board that existed out there was between $25,000 and $250,000. So set your expectation knowing that this is what I want to raise via equity crowdfunding. If you're going to do it under regulation crowdfunding, like I said, there's $1 million cap. Keep in mind that investors are not stupid. So your valuation that you have for your company, if you're going to be raising money via equity crowdfunding, needs to be realistic. If you're a startup with an idea and you think that it's a $50 million valuation for an idea, I guarantee you will raise no money. The average valuation for companies right now across the board in crowdfunding is about $7 million. So set your expectation starting right there. It's broken down by industry. So the average raises vary by industry. They vary by region of the country. So you need to look at the data so you can learn what are average valuations in my industry, what are average valuations in my region, what are the average raises, by the way. The companies don't raise $1 million off the bat. They don't raise $1 million in all industries. So you need to understand what is the average raise that is done in each industry so you can set your expectation as to what you will raise there. And you need to understand this is going to take a ton of time and energy and effort on your behalf. You're going to be putting this campaign together, and then number 6 is you're going to be communicating that whole marketing plan and social network outreach that I was telling you about is insanely important. You will not be successful with your campaign if you are not spending a lot of time communicating with the crowd and answering the questions along the way. So what are the benefits to raising money online via crowdfunding? Well, first, it does reduce the funding gap for you, so you can get capital where you couldn't get it before. It provides investors with a new way to invest in companies that they believe in where they couldn't before, particularly if you were not a rich person. So now you can raise money from your friends and family where you couldn't necessarily before. It does foster local innovation. So local companies that don't qualify for Silicon Valley capital can get money locally now. It allows for diversification and job creation, which is phenomenal at the end of the day if we can support industries and individuals around the country where we need to create jobs. Believe it or not, because all of this is happening online, it takes what's known as an opaque private capital market and brings it into a very transparent area. And if you're in an area or a region that is not known for something, it really allows you to position that region at the digital forefront. So if you're a government official listening to this in a local area and you've got a core competency in this area, you should be looking at crowdfunding for people, companies in your region so that you can help promote them online, and it'll actually position you at the forefront for those companies there. A couple other things before I wrap up is there's this thing that we created called the Crowdfunding Economics Equation. And so because we built that database that collects all the information, we actually incorporated all the data and reduced it down to this formula. And this formula allows us to determine whether or not a crowdfunding campaign will be successful at hitting their funding target. We've created a whole webinar series about this. So if you've actually, at the beginning, if you've selected you want to receive more information about crowdfunding from us, or if you haven't, you can do it at the end. But click that box and you can learn more about the Crowdfunding Economic Equation there. I can't go into it with a lot of detail on that. And that's really the series that we put together, which is how you can raise $1 million for your startup or small business. Companies are out there raising the average, but there is a way in which you can raise $1 million, and we definitely can help you with that. That crowdfunding data that I told you about, the CCA group, this is the dashboard that's there right now. So you can see right now $132.8 million has been committed since the industry went live 2 years ago. 136,000 people have backed these campaigns. There are over 1,000 companies that have tried their hand at crowdfunding right now. The average raise across the entire industry is $245,000. 5,200 jobs have been created, and you can see where capital is flowing. You might not be able to see it very clearly here. That's why I encourage you to go to the website and see it. In the United States, you've got California, Texas, and New York really leading, but you can see pretty much all states in the union, albeit I think 5, are raising money online right now. So if you're anywhere in the country listening to this right now, you should be thinking about this as a possible avenue for you to raise money. Like I said, there's different platforms, and they have different core competencies in different industries. WeFunder, Seed Invest, and Start Engine are the 3 largest ones. I just wrote a piece for VentureBeat that breaks down the different platform leaders. So if you just Google VentureBeat and Sherwood Neiss, you will see any article that I've written about the crowdfunding industry, and you can see that piece that really analyzes the top platforms by capital raise, average commitment, industry itself. So it's pretty interesting. And then this last chart is the top 15 industries by campaigns and commitments. So you can see that there's a broad spectrum. While application software companies are raising money, people that are doing personal services, so yoga studios or anything like that, you can definitely use crowdfunding to raise money that way. So let's just jump to another quick poll. And so now that you've learned about crowdfunding for your business, I'd like to know, what are your next steps? Are you going to research crowdfunding online? Do you really want to jump in and start applying to raise money? You want to contact us for more information? Contact SCORE for a mentor? Or are you just here to really just learn about crowdfunding itself? I think this would be interesting to see, did this get you energized enough to think this might be something for me, and how can I utilize this going forward? Hopefully a lot of you will be thinking that I definitely want to give this a shot because the banks aren't responding to me. I've run through my personal credit limits, and now I want to find some other avenues. Good. We've got people researching crowdfunding and other people that definitely want to get started. All right. Nice. We'll give it a few more minutes here. A few more seconds. Excellent. Okay. So with that, you can continue to answer if you want. I'm actually going to bounce on over to our question and answer area where you can ask lots of questions and hopefully I can answer them.
Okay, great. Sherwood, thank you so much. We will go ahead and move into the Q&A portion of the webinar. I'm going to be reading questions that participants have been sending in. Please continue submitting your questions. And in